So I wanted to do a video on cash secured puts, but be able to record it on the web app here on Robinhood rather than my phone, which a lot of my older videos are a little bit cheesier. So I'm going to get better equipment when it comes to recording over time. But I wanted to jump in this. I started this account right here as basically just to show people what you could do with cash secured puts. You know, at the peak, we're at around 62%, right? Just from April, not the year, but from April 4th. So that's 4 months in. So that's over 100% basically in a year with the APY that we're getting per month. So we had some hiccups here with AMC. AMC announced the dilution. It finally went through. We were milking that because of the high IV. The IV was high due to the fact that there was anticipation of that happening, and it finally happened, right? But I was able to recover it. I put my head down. I kept moving forward, and I recovered it. So what is a cash? How can what? I'm going to explain what a cash secured put is in layman's terms. I'm going to explain it very simple, very, very simple, and what it is and why the probability is high. Okay, let's just use Tesla, because all the new people jump on and they throw their whole portfolio in a Tesla call for the buy side. Okay, what people will do, wow, it looks kind of low, let me buy a call, and they just hold it and watch. Then when Tesla's running up, they act like it's a stock and they have unlimited time. No, I'm going to hold it till the break even. You don't even know what the break even is. You don't need to know that when you're brand new to options. You don't need to know that stuff. The theta decay is very, very high. The closer it gets to expiration, the less the contract's worth if it's not moving in your direction aggressively or in the money. So I think it's 78% of options contracts expire worthless every month around monthly expirations. So if you're on the buy side, you have an 80% chance of loss. If you're on the sell side, you have an 80% chance of winning right off the bat, just statistically. So what if I'm selling 50% out of the money? Because when I sell a cash secured put, I'm betting, all I'm doing is I'm betting where a stock won't go, and I get paid. I pick a losing play. I'm going to explain this in multiple different ways for everybody to understand this. I simply, again, pick where a stock won't go, and I get paid more. Let's go to trade options. Now I'm in this on my portfolio. I think I'm in this on this Robinhood account. We're going to look here in a second. Let's choose the date here. Let's choose December, right? Less than a month out, 29 days out. I can bet. Let's go to put. No, we're not going to buy when implied volatility is higher. Sell. We're entering by selling. Put. And you exit by buying that put, right? And I'll show you in the account in a second. Sell to enter, put. Okay? What am I agreeing to here? I can bet that more won't hit $2.50. How much do I get paid at expiration? See, on the buy side, everything's backwards when you're selling. Okay? On the buy side, you want to get in it and out of it before expiration. On the sell side, you can let it expire. On the buy side, time's your enemy. On the sell side, time's your friend. On the buy side, implied volatility, high IV stocks, is your enemy. On the sell side, it's your friend. On the buy side, theta decay is your enemy. On the sell side, it's your friend. Okay? Flat markets. If you're in an options contract and the security you're in is running flat, that's your enemy. On the sell side, it's your friend. Okay? The stock going in the opposite direction, let's say it's going up and I have a put, that's your enemy. So direction's your enemy. 2, it's not 50-50. A stock doesn't go up and down. It runs flat sometimes. It's not 50-50. It's more like a 30% chance, right? The stock can run flat. It can go up. It can go down. Doesn't matter as long as it doesn't hit the strike. If it hits the strike, it still doesn't matter. At expiration on 12/15, December 15th, more MOR would have to be at $2.50 or below it for me to be in trouble. Am I really in trouble though? At expiration, when it expires, if it's at 250 or below, I am forced to buy per contract that I sold 100 shares. Okay? So I would be forced to buy 100 shares. No big deal. I still get to keep this premium, this 50 cents down here, this $50. Whether it hits it or not, that's my $50. So my dollar cost average is 200. We can see that right here. Max profit 50, max loss 200, because I'm receiving $50 when I sell this to enter. If this stock goes to zero and ceases to exist, my max loss is 200. What's the likelihood of that? By December 15th, it's just going to cease to exist. Pretty low probability, right? Unless they're declaring bankruptcy, which they're not. So they have data coming out, and in early December, once that data's out, that's why the IV is high, the implied volatility. Once that data's out, that's a wrap. It's over. The IV is going to fall off, and that options contract is going to get premium crushed. Premium crushes your friend on the sell side, not on the buy side. Look at that IV, 400. If you're on the buy side, you're out of your mind. You're not making money on the buy side. Maybe if the thing really, really tanked. But after that data's over, a lot of times these stocks, when they have anticipation with FDA approvals and whatever it may be, and the data comes out, it will drop even to your strike when you're selling a put, and you still almost make 100% or near it. And people on the buy side are like, what? This is a scam. It went down, and I lost money that bought a put. I don't understand. This is a scam. I'm done, right? And they give up. That's because the IV dropped. The IV can make the price shoot way up. So the price is going to shoot down, even though the stock shoots down, the price of the contract shot down because the IV was so high. Okay? Let's go ahead and look at this. Let's go to investing. I'm in more over here. Excuse me because I'm sick, guys. More right here. All right? They just had earnings, so a lot of the premium's going to get wiped off this thing. I wish this would load up here. There we go. You can see how great it would be if I sold the put up here. When you buy a put, you want the price to go up, and then you exit. When you sell a put, it's opposite. I want to fill as close to the asset. I want to get the highest fill, and I want it to go as low as possible. The lower it goes, the more money I make. That guy on the other side, the people on the buy side are getting toasted here. If they bought a put up here and it went down, I'm selling it. I'm doing the opposite thing. I'll do another video on how to really do earnings. Because you guys that play earnings, look how much you get crushed. Imagine if you're on the sell side. What is your probability of winning on earnings? This is off topic. What, like 10%? And do you even win that much? Imagine if you inverse that and you're on the sell side. You're jumping up to 90%, right? Let's take a look at this in another way. So let's go back here. It's going to be interesting to see what happens whenever earnings is out and they beat. So I expect these to be crushed quite a bit. But anyways, let's go back to more again. I can also look at the stock and say, hey, in its lifetime, it's never seen 250 ever since it's existed. Ever. So what's the probability of it going there in a month when it's never done it in its existence? There's more probability in my favor. IV is high. More probability in my favor. When the data comes out, right? It's so far out of the money. This is what? We're at 680. That's what, about 60%, 70% out of the money? So it has to drop 70% for me to lose or more. And I still may not lose. I'm just forced to buy the shares. I can then turn around and sell a covered call on it, right? If I'm assigned those shares and they make me buy these shares, okay, let's say it goes to 240. Well, my dollar cost average now, remember we got 50 bucks, is now 200. I'm up 40. I can just sell the shares. I made money. Or I can hold it. And let's go out a little bit here. We'll go over to January. Let's say I sold a $7.50 call. They're not going to be priced this much because it's going to be lower. But, if I'm selling something and getting 200, now all the shares are free. I just received that money back. When I sell, call, or sell, put, that money is mine. I can pull it out of the account. It's over. The whole trade's over, right? Yeah, I may get assigned down the road. That money, let's say this right here, let's say I sold a $5 put, that I can immediately pull that out. Trade's over. On the buy side, I gotta wait, and then I gotta exit it, and then I can pull the money out. Sell side, the second I hit sell put, boom, and the money is credited to my account. That's mine, and I can pull it out. Everything's the opposite, so you have to change your mentality. And a lot of times you freak out, and you'll see the contract go red whenever you enter it. Sell to enter, right? Get out of your options buyer's mentality. You're in an options buyer's mentality. Come to the sell side mentality where you don't care. An option contract can do whatever you want. You're not going to go to 250. I know it. And right around expiration, that thing's going to go to 0. You can get out of this whenever you want. How do I do that? How would I get out? Let's say the thing drops, I want to be out, and the thing just drops ferociously. I can come over here and I can do this. I can go, let's look at EYPT. How do I get out of this position? Okay. I would come down to, now excuse me here because I use the mobile app. Review order. I would go to buy to close. Yeah, never mind. It's right there. It's loaded up. I buy it to exit. Sell to enter. Sell to open. STO. BTC. Bought to close. Right? And I literally hit submit. So when this thing drops down to $5, I exit it. If I entered for 50 and I'm buying it for 5, what's the difference? $45. That's $45 in your profit. Or $45 in your pocket. Or let it expire. Up to you. You can get out whenever you want. A lot of new people are like, how long do I have to hold it for? You can get out whenever you want. You can be in for 15 seconds, right? I wouldn't suggest that unless something is going terribly wrong. But yeah, 48 cents, this thing dropped to, that's a glitch. The whole thing's a glitch till around expiration. But yeah, I will do a full video. This is strictly on cash secured puts. I'm going to do a full video on the wheel shortly. So this is just another strategy I use. High IV options, way out of the money on inexpensive stocks. This is just one of my strategies for cash secured puts. If you don't believe that it works, the account, we're up year to date, we're up 58%. And this is with only using maybe sometimes 25% of the equity in the account, right? I'm heavy right now because I bought some Mara equity, then I'm selling covered calls against it for the Bitcoin halving. And this account's going to slow down quite a bit because the Bitcoin halving is 5 months away. But usually I'm only using maybe $400 or $500 on a $1,500 account here. So I'm really only risking the profit in most cases. Right now, I'm not. I'm going a little bit more aggressive here. So this is what you can do. This portfolio is representing theta decay. Is all it's doing. I'm collecting all that theta decay and premium rot. And this is, you can also view it the other way. This is all the people that were on the buy side, how badly their portfolios are going down and mine's going up. Just another strategy. If you guys have more questions, if you don't believe it works, come into the Discord. The link will be below in the description of this video. Ask the members. Come down to the option sellers chat room. I'm going to follow this video up with a wheel strategy, a full cycle wheel, where I'll explain that in the other video. But if you guys like this content, make sure to subscribe and like this video for more.